Good evening, TheoTrade. This is Corey Rosebloom, and you're watching the Theo Nightly Video for May the 2nd, 2019. And being the start of May, that'll be interesting to take a look at this little market wisdom of sell in May and go away. And that just has to do with the conventional wisdom, or old wives' tale, if you will, of the market peaking or falling from May forward, usually until about November or even October. Does that hold up, and should we be selling in May right now in 2019? This year, maybe. We'll take a look at that later in the video. But first, I wanted to start with an overview of what happened, just anecdotally, from prior sell in May events. So the red lines on the chart here, this is the S&P 500, is May the 1st or May the 2nd, May the 3rd, depending on whether it was a Friday or a Monday. We're going to have the 1st of May was a Wednesday in 2019. Nevertheless, just what happened, without getting too deep into statistics and the weeds and all, in 2018, this was May the 1st, and that didn't really work in terms of sell in May and go away. The market continued higher as the uptrend pushed up to new 2018 highs. Well, what about 2017? Sell in May, go away. Well, it didn't really work there either, as the market, surprise, continued the uptrend with higher highs, higher lows, and this radical upswing that took us into the peak and rapid sell-off early in 2018. So that didn't really work either. How about 2016? In terms of sell in May, go away? Did it work? Sure. The market went down after that, but then kept going higher and then closed the year even higher than that. If you sold here and came back in October, November, that was a flat market. That was also a trader's market in 2016. Results are inconclusive. What about 2015? Well, this one actually worked. That's, I think, the first time it worked in the chart going backward from there. So sell in May, go away, come back in October or November. If you came back in November, oof, that was a flat market there, although you did sidestep or stand away from this August decline. So that didn't really work either necessarily. How about, if you go back in the chart, 2014. So in 2014, same failure really. This is May, here's October, November, and the market went up, crashed into October, and then recovered quite strongly by the end of the year. And a couple more. In 2013, sell in May, go away, also didn't work. May was an up month that year, and the market continued the march to new highs. Also 2012, where the market peaked or fell from May and then ended June, or began June, with a rally to the upside. Stepping back in October, though, if you are short here, back the market in October, well, that would have been a lost trade. The market would have actually gone higher if you stepped out and then stepped back in. And then 2011. That's the second time maybe that it actually worked as a strategy, and this is what, if you hear the old wives' tale, sell in May, go away, and come back in October, you'll also hear it in November sometimes too, then that was the first time it really worked, or at least has been effective as a standalone strategy. So selling in May, coming back in October, November, that would have worked. So all in all, is it working in today's environment? No, not really. Like most things, it's cool to talk about when you take a look at it just even like this, without doing deep level statistics and research and all that. Just noting that selling in May, where these red little lines took place, it's probably worse than a 50-50 chance. So we can't really rely on that to manage our portfolios. Perhaps that's not surprising. Now, let's take it back to where we are in the market, and should we sell this May? Well, probably. Why should we be a little bit more cautious going into May 2019? That's because the market has had a strong and extended run off these December lows, 2350. We're already 600 points to the upside and just made new lifetime highs. That is plenty of chance to take your profits, take some of the money you've gained or the profits you've gained off the table, lock it in, and start getting ready for a pullback in the market. Again, that's probably with risk twist spreads or any other type of put premium purchase plays. And that would include buying VIX futures or buying VIX positions or getting long in some way volatility. So as we set in today's session, we're seeing the market push down away from the prior highs. The question will always be, is this just a normal pullback similar to what we saw here, there, and even earlier, if that's even a pullback in January, or is this something bigger? And something bigger would refer to maybe February 2018, and then potentially October or even December 2018. That's going to be the big question as we push into the month of May after this stellar Q1 in 2019. That's the picture on the S&P. We can look at the Nasdaq as well to see that it also had its push to new all-time highs and then pulled back. So right now it sits on the pivot point or the prior high, roughly at 7,700. So as we push into Friday and into next week, watch this 7,700 level in the Nasdaq futures. If the market crests and breaks underneath that level, we probably will see an extended sell-off towards 7,500, 7,250, or maybe even 7,200. Those would be little short-term targets if the market does continue lower. And we do want to be ready for that, both by taking profits on the long side, getting long premium, long volatility in out spreads that are bearish, or other types of positions that would take advantage of a falling short-term market. And now we'll take a look also at the Dow mini futures, and that is shy of the 27,000 level. Unlike the S&P and the Nasdaq, the Dow is not making new lifetime highs. It's close, but it's not quite there. So this arc down or down swing is taking place a little bit shy of its all-time high. And we'll finish up with the Russell and take a look at just where the Russell is. It's the small cap index. It is well off the highs. So in terms of relative strength or weakness, the strongest two indices are the S&P and the Nasdaq. The Russell is the weakest, and the Dow trails at third place. The Russell is still having trouble, we'll update the trend line, at this 1,600 level. And that is what we will be watching for this week and the next, is this pivot or bounce or play between 1,600, 1,500, and this short-term midpoint where the market's holding support, at least at the minute, at 1,560. So right now, as we push into Friday, as May begins, as the market makes new all-time highs, but does so in a little bit of a weaker position, meaning it's not really getting strong volume and strong momentum and strong internals, it's actually weakening. So we will be cautious. We will tilt to the bearish side. We will tilt to the protective side. We won't go ahead and sell our whole portfolio because of the sell and may go away concept. We'll kind of add a dash of salt to that. But we will look at the current market, current levels, and we'll manage any positions appropriately. As always, be safe. Take care. This is Corey Rosenblum with your Theo Nightly Video for May 2nd, 2019.